There's one stock that is about to break out. It is a real estate technology company. It has gone up about 100% or more just in the past month. Dropped a little bit, and now it's basing, looking like it can jump back up. There is a small-scale public figure, Eric Jackson, talking about this stock a lot. He is technically a hedge fund manager. The stock is Open Door, OPEN is the ticker, and let's jump into what the company looks like fundamentally and visually on the chart in terms of actual buys and sells recently.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right. Loud and proud. Here is the Open Door pivot level. Now, the question becomes, is this going to hold? Because, yeah, today's wick looks a little gnarly, but look, there was a wick like that a couple days ago as well. So I don't like to get too engrossed in the day today, but it is notable to say that SPY pulled back a little bit today and Open Door is still holding. And you can see on some other companies, they are also pulling back today. So it's not too worrisome to see a company that's sort of holding like BE might be, or in our case, Open Door, that's called relative strength. And similar tickers to Open Door we'll look at, but what I like about this company right now is, yes, it went on a crazy run, but there is some positive to that. It's on everybody's radar, for one. It did this before where it went up 100%. That's 400%. The percents get crazy, so it's easier just to say it went from basically 1 to 4, back to 2, up to 10, back to 6, up to, so you see what's happening here. It is speculative, but it's holding up, and so there's a lot of interest in it. And as volume dries up, there can be breakups to the upside. And now the question becomes, can you get in here with low risk? And that's kind of the whole point of a line here, is you can risk one of these prior days. And yeah, the markets are dumping, but Open Door is not. So those are the opportunities you want to be in. And we can look at the 10-year, which is up a little bit. We can look at the dollar, it's down a little bit. We can look at oil, up a little bit. We can look at gold. Well, we'll just look at KGC, but that's up a little bit as well. Gold is almost trading like a meme at this point instead of a safe haven. IWM, the small caps, up today, also known as the Russell. So, Open Door is a small cap. You could say it has relative weakness to the small cap index. That's notable as well, if you want to be careful. This is where it's at. The level is pretty clear, and if we look on a 5-year chart, of course there is no 5-year chart because this is an IPO that just drifted down and then had a bunch of volume come into it. But here's the deal. This is Open Door. It is got Keith Raboy, chairman of the board. He's sort of infamous in Silicon Valley, Miami. You got this Kaz, former Shopify COO, who is talking aggressively, which is what you want to see for a company like this. This is also aggressive, 1,400 to 200 employees. This is sort of the borderline insane Silicon Valley rhetoric that makes you excited about a $4 stock. And look, here's the deal. You want to be careful. They do have revenue. They did sell thousands of homes. They do have a net loss that's expected for a penny stock, aka a startup that's publicly traded. And now the question is, Are there going to be headwinds? We did have rate cuts, but they were baked in. Rate cuts are very important for real estate, even real estate technology companies. It's not totally crystal clear what their technology offering is, aside from if you're not making more money with them than with a real estate agent, then they really have no offering at all, unless it's selling your home quicker. It's not completely clear to me that they've demonstrated that their value proposition is 10 times better than the existing offerings. This is going to happen. This is all part of this Silicon Valley game. And now the question is, what's going to happen if they cut a bunch of employees? And are they going to be able to keep up with not just their competitors, but also with the hype? This is the big talker right now. His name is Eric Jackson. He has been trumpeting Opendoor. He says it's his largest position. So it's kind of a unique situation because Opendoor could obviously not be a fund's largest position for almost all funds with a public presence because there's so few dollars traded. There is a lot in the sense of a single person with their single account buying it. But if this is $8 billion traded, this is the most. Maybe you put 100 million in it. I think even 100 million would be a dangerous amount of money to put in a stock like this. If the volume dries up again, you're high and dry, you're liquidity trapped. And if you look down here, it was trading 100 million. You can't get out on a day like that. You might move the stock 40% or more down, which means you lose 40 of your 100 million, which is absolutely insane. So I guess this is our guy, Jackson. It's his largest position. We'll see what happens. He has insane Cathie Wood type price targets, and he wants this to be the next Palantir. Okay, who doesn't want it to be the next Palantir? Fortunately, I don't advocate investing like that, so on this channel we don't have to worry about that. All we have to say is, can we get a 10% push out of this, which is not a lot on a stock of this dollar value. And maybe if you get chopped out, you lose 1% or 2%. If you don't get chopped out, maybe you get the move, maybe you sell half, maybe it does dip down again, maybe you even get a smaller move like this, and you have to sell out of your position and you're still up from where you entered. That's the name of the game, in my opinion. We're not trying to get the next run to 20, although that could happen. You might have a third half your position still in on a move to 20, but I'm not Eric Jackson. I don't think a lot of people want to really rally behind this guy unless you are literally on the board or have stock in Opendoor that's private stock or yet to vest. Or I'm not here to tell employees what I think Opendoor is going to happen. For people who haven't taken a position in Opendoor yet, the opportunity is this. It's a tight candle here where this entire candle is only about 5%, okay, which is a lot. The average range of this stock is 12% over the last week and a half. Well, 10 days is really more like 2 weeks business day wise. But if this candle's 5% and you risk a couple percent, a few percent, maybe a more, let's say, example time, let's say you have a $500,000 account and you want to put 5% in Opendoor, okay? So that's $25K in this stock. And you risk, say, 5% of that, you're risking $1,250. 5% of that is about the width, the length of this candle, okay, the height of this candle, whatever you want to call it, from top to bottom. 5%, just about. Of course, if you get your 10% move, you're up $2,500. And if you sell half, and then you'd be up $1,250. And then if you hold for another 10% up to $10, say, so you don't even have to risk it going through $10, which is a whole dollar level. A lot of people are going to be looking at that $10 level. You can see it actually sold down on that level. So maybe you get out even before that. You sell your other half. You get 10% additional on that half. So that's a $2,500 move. You're up $2,500 plus $1,250. I don't do public math, but that's what, $3,750. So that's a solid gain for a 500K account on a tiny stock, which you don't even have to believe in the open door vision. You just see an opportunity to make a gain. So that's a little example. And this is the other sympathy offer pad that's publicly traded. Of course, there is Zillow, but when we look at OfferPad, this is the chart, okay? Didn't really go. Definitely a laggard. Maybe you can buy it here with a really tight risk, but I would want this to sort of start to turn up before that happens. So Open Door's the better move. Zillow's not looking great. IWM is looking good, the small cap index, which does well with rate cuts doing well. Real estate companies do well with rate cuts doing well. That's the play. Those are the risk levels. Probably here, which is a high volume day, which you can see that high volume extending out to this indication here of the volume. You can see there's not much volume here, meaning on this particular day, most of the volume, when combined with all these other days, is up here. I don't really know on that particular day how much was traded. I'm just trying to articulate where to set your stop. Here is probably too far, and if you set it down here, you're only really getting the volume from this day and these days. That's what I'm trying to say. So it could go right through here, whereas you have support all the way down here, you have support up here, kind of have support down to here. And what I'm saying is that there was a bunch of shares traded there. So as long as the price is above those shares, above the people who bought here, who bought this capitulation drop, and it started to move the upside, people who bought here, as long as the price is above that level, those people are still making money. So they're unlikely to sell their shares because they're happy. Once it goes below, there could be another down move like this. So that's the level. If you like these sort of videos, hit that subscribe button. You'll get notified of a new video. It's only 3 notifications a day, even if there's more videos. If you want to have a Q&A environment, head over to stockscommunity.com. It's $25 for 7 days. You can ask anything you want. And there is a weekly course member live stream in that community for people who join. Even if you just joined with the $25 welcome offer. So I think it's an all right deal. And if you like this video, like it. I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.